Hey there, hope all is well. Back at you today with some more RTD news updates. And as always, if you find today's articles to be informative, please share them with your family and friends to help them become more monetarily aware on events surrounding them and their own personal finances. As well as if you're new to RTD, click the subscribe button for more RTD interviews and monetary news updates. Let's get into today's articles. Well, today I grabbed a couple of the daily readings that I thought would be worthwhile in sharing with you guys. First one being USA Today, Wells Fargo CEO retires with 134 million. Next article from Business Insider. Red alert, get ready for a severe fall in the stock market, HSBC says. Third one, Syria's currency crisis means big trouble for Bashar al-Assad's war efforts. And the last one, Obamacare is a sideshow. Medicare and Medicaid are the real problems. So let's dive into today's articles. So here's today article from USA Today in regards to Wells Fargo CEO Stumpf. And he's been it's been a day or two or so since announcing that he's resigning or retiring or however it goes. But what's new is the fact that he'll probably walk away at the end of the day with $134 million. So for those that may not be aware, I'll just give you a little rundown as to what this article is about. It says John Stumpf, the embattled CEO of Wells Fargo, unexpectedly retired from the company on Wednesday, effective immediately. Stumpf's move comes just weeks after he was grilled by two congressional panels over the way the bank handled the alleged scam where upwards of 2 million accounts were created by employees without the knowledge of customers. The accounts were allegedly open so thousands of employees could meet aggressive sales goals set by management. Stumpf, 63, is resigning as both CEO and chairman. He has been CEO since June of 2007 and has worked for the company for 34 years. The fact that Stumpf, the company's top executive, was also the chairman of the board was another point brought up by lawmakers questioning why the bank didn't act sooner to deal with the widening scandal. The roles are split now. The company's president and chief operator officer, Tim Sloan, will replace Stumpf as CEO. Sloan was head of the Wells Fargo unit that made loans to large corporate customers and not directly tied to the alleged customer banking fraud. Scroll down some more. Gives a little quote from Stumpf himself. It says, I have decided it is best for the company that I step aside. I know no better individual to lead the company forward than Tim Sloan, Stumpf said after the statement. While Stumpf doesn't receive a special retirement payout, executive pay tracker Equaler estimates he'll walk with 134.1 million. The package remains that large even after Stumpf last month agreed to a 41 million clawback following a grilling he received from the Senate Banking Committee reprimanding him for not taking responsibility. It says during this nearly 4-hour testimony before the House Financial Services Committee last month, Stumpf was called upon several times to resign by Representative. Stumpf said that he after the hearing wasn't planning to resign and that remaining at the bank and seeing through the reforms was part of their taking responsibility. So it talks about here how now with Stumpf out the way, J.P. Morgan, Chase kind of steps up as being one of the leading banks in the country, as opposed to Wells Fargo, who's had that position. Apart from the last couple of weeks with this whole scandal, having dropped 10%, where it says investors have lost close to 23.1 billion in market value and shares. And so once again, another situation where a executive, CEO, higher up, the number one person for a bank that is guilty of committing, activity that is technically illegal. Yet I haven't heard anything about any prosecution, any type of, real slaps across the wrist as far as handcuffs to really show the American people that these people are not above the law, as well as the executives or whoever was beneath him that knew about these things for the prior year. So just another, story of what's going on. He walks away, but yet will walk away with heavier pockets than when he was probably there. So good article below if you're interested in checking it out. Here's an article here I think that, is very telling of what's really going on in the economy. And it has to do with the fact that a major bank has now, or another major bank rather, has now come out with some red alert type news in saying that the stock market is getting ready to go belly up. So here's an article from Business Insider. Red alert, get ready for a severe fall in the stock market, HSBC says. So this article is by Bob Bryan. And it's about HSBC's technical analyst team has thrown up the ultimate warning signal. In a note to clients released Wednesday, Murray Gunn, the head of technical analysis for HSBC, said he had become on red alert for an imminent sell-off in stocks given the price action over the past few weeks. Gunn uses a type of technical analysis called the Elliott wave principle, which tracks alternating patterns in the stock market to discern investors' behavior and possible next moves. In late September, Gunn said the stock market's moves looked eerily similar to those just before the 1987 stock market crash. Citi's Tom Fitzpatrick also highlighted the market's similarity to the 1987 crash just a few days ago. On September 30th, Gunn said stocks were under an orange alert as they looked to him as this they have topped out. And now, given the 200-point decline for the Dow on Tuesday, Gunn thinks the drop is here. And he quotes him as saying, with the U.S. stock market selling off aggressively on 11th of October, we now issue a red alert, Gunn said in the note. The fall was broad-based and the traders index showed intense selling pressure as the market moved to the lows of the day. The VIX index, a barometer of nervousness, have been making a series of higher lows since August. Gunn said the selling would truly set in if the Dow Jones Industrial Average were to fall below 17,992 or if the S&P were to dip under 2,116. The Dow closed at 18,128 on Tuesday, while the S&P settled at 2,136. As long as those levels remain intact, the bulls still have a slight hope, Gunn said. But should those levels break and the markets close below, which now seems more likely, it would be a clear sign that the bears have taken over and are starting to feast. The possibility of a severe fall in the stock market is now very high. And then it goes on, give a little graph here showing some things. But the word is out. You know, once banks start telling you what's going on, then they obviously know what's going on. I would assume that they were those that are heavily invested, those that are kind of controlling the markets. They knew ahead of time and probably gave the A-OK for these mainstream news sources to begin putting these articles out here. So it's good to say that some things have already happened. Now they're just kind of giving people a fair warning to say, hey, we kind of gave you a heads up prior to, so you were warned. But articles here if you're interested in finding out more about it. So as we all know, you know, the whole Russia-Syria fiasco dealing with the U.S. and all this, the tensions that's heating up quite rapidly over in that area. Here's an article from Quartz.com that I came across that I thought was very interesting. And it talks about the Syrian pound and how their currency crisis means big trouble for Bashar al-Assad's war efforts. And so, you know, I can imagine that he's trying to defend his turf from, you know, the West / the West-backed regime of terrorists. And so it costs money. And it doesn't help that, you know, everywhere in this country, you know, it's good to say that the economy is tanking and the pound there is not really worth much at all. So it's hard to fund these things. So just to give you an idea of what's going on with this article here, it says late this spring, in between eulogies for fallen militants and diatribes on heated issues in Salaf politics, Abdullah, a Saudi cleric who now wields influence in Syria, took some time to weigh in on a subject far outside his wheelhouse, and that's currency. Musahini's Twitter tangent might appear out of place, but given his occupation as a celebrity recruiter and cleric for jihadist militant factions in Syria, this is the man who used Twitter to call for the blanket extermination of all Alawite men in 2015. In the context of the Syrian conflict, however, the diatribe came as no surprise. Economic conditions have steadily deteriorated as the war drags on, leaving the Syrian regime and its opponents hard-pressed to carry on the fight. More and more, it appears that the economic collapse, including the continued plummeting of the Syrian pound exchange rate, may pose an imminent challenge to the Syrian government's recovery than the back and forth daily grind of the conflict. So here's a quote. Syria's currency crisis has weakened its military might and made foreign support a necessity. Then it goes to talk about Syria's currency crisis has weakened. If Syrian President Bashar al-Assad cannot rein in the slide of the Syrian pound and gain control of his economy, he also cannot retake control of Syria, which he iterated in his pledge to do earlier this month. Russia's intervention on Assad's behalf in 2015 has greatly benefited the Syrian president. Over the past year, the Syrian government has made strategic advances, including around Aleppo, Syria's largest city, and the sites of country's most devastating violence. But over the same period, the Syrian pound, which was valued at 47 to the U.S. dollar before the conflict began in 2011, has lost more than half of its value, falling from 310 Syrian to the dollar in September to around 520 to the dollar today. So prior to the war efforts, prior to all this confusion in that region, it was 1 to 47, which were probably normal times. And then after and during, it was 310 to 1. And as of today, it's 520 to 1. So it says, in July, the Damascus Chamber of Commerce, an economic group loyal to the Syrian government, published a review of the economy's trends over the past year. Its conclusion: if 2005 was a bad year for the Syrian pound, the first half of 2016 was catastrophic. So it just goes on, right here, just to draw to an end and give more details as to what's going on, how it all plays out, and just more information if you're interested. But other than that, that is what an economic collapse looks like. Not only are they in war, not only is there a greater war probably coming, but yet those citizens that remain there are struggling big time because the Syrian pound, doesn't buy much. So it's good to say that, not only are they war torn, but they're probably hungry and lack of daily necessities like water, electricity, things like that, which is probably going through the roof. So just, more signs of economic collapse, but yet that's just a local incident in Syria. But I'm assuming on the people there, it's very tough. So anyway, articles below if you're interested. Here's the last article from the Ron Paul Liberty Report, and it's Obamacare is a sideshow. Medicare and Medicaid are the problem. And so it's an article from Jacob Horberger, and it's just give you an idea. It says Trump correctly points to the horrors that have overcome with Obamacare, with insurance companies fleeing the marketplace, leaving millions of people without medical coverage. Trump's solution: abolish Obamacare. And then what? Trump says he will come up with a plan where everyone has health insurance, only he doesn't specify what the plan is or how it will work. He's just sure he can do it. Clinton acknowledges that Obamacare is a disaster, but opposes repeal because that would eliminate the mandatory coverage that the law provides. So she wants Obamacare to remain. And then what? Clinton says she'll make it work, only she doesn't specify how she's going to do that. She's just sure she can do it. So as you hear, both candidates, one says it's horrible, the other one says, we can make it, we can tweak it, make it work. But he's about to get into the real cause. It says, notice something important. Despite their disagreement on Obamacare, both candidates and most Republicans and Democrats favor Medicare and Medicaid, which are the root cause of America's healthcare crisis. Before Medicare and Medicaid, there was no healthcare crisis. Even though Obamacare were to be abolished, there would still be severe ongoing healthcare crisis because Medicare and Medicaid would still be existent. That's why Obamacare was enacted in the first place, because there was a healthcare crisis brought on by the Medicare and Medicaid. That crisis will continue to exist on the day that Obamacare was abolished. So here you have Trump and Clinton saying, elect me because I have planned to fix the healthcare crisis, while at the same time they both exclaim, elect me and I'll make certain to preserve Medicare and Medicaid. Those two candidates can debate until they are blue in the face, but one thing still remains. As long as Medicare and Medicaid remain in existence, there will be a severe healthcare crisis. Neither Trump nor Clinton will be able to do anything to fix it. That's because socialism is inherently defective. Nobody can make it work. So interesting. It's good to say that the deficits that these two programs have is unbelievable anyway. So no matter what, any type of government imposed or government suggested solution to a problem is only a cover-up for what they've already created. So it's good to say nothing can work unless you let the free market do what it does, and that is to create and bring new innovation to bring competition. So anyway, here's today's articles. Hope you guys enjoyed it. As always, if you find it informative and educational, feel free to share with our family and friends to help them become more aware of what's going on around them. And if you're new to RTD, click the subscribe button for more RTD interviews. Leave me a comment below. Love to hear your thoughts on these articles. Until next time, see ya.